Today's Animal Spirits is brought to you by JPMorgan. Check out the JPMorgan NASDAQ Equity Premium Income ETF, ticker JEPQ. It's an active ETF that seeks to deliver monthly distributable income and NASDAQ 100 exposure with less volatility. So this is a covered call strategy we've talked about in the past. Unique, low cost.
Would you say it's the sister to JEPI?
I think so, yes. It's the NASDAQ 100. Yeah, so income, diversified equity solution, credit replacement, they say. So they're targeting a 9 to 11% annual income consisting of dividends and then option premium. I'm guessing most of that is option premium. They pay out all the income on a monthly basis. So if you're someone who's looking for income or a retiree, maybe that seems to make a lot of sense.
We have a talking about coming up with them. Well, we'll dive. You have questions? We'll
one
get
of our
answers.
most requested funds
True.
that we've seen. So check out more to learn more. The link in the description. Remember, always understand the risk reward before you invest in anything, and go to jpmorgan.com to learn more.
Welcome to Animal Spirits with Michael and Ben. Ben, it's good to see your face.
Thank you. You too.
You're welcome. How was your Father's Day? Same.
Father's Day was good. I got the one different thing. I got to sleep in, and then the kids woke me up with donuts. That was nice. You know what I had for my? You know what kind of donut I had? Two donuts.
An eclair.
I did have a Long John. It was good.
All right. Quick update. I'm told that future-proof rooms are selling out. And not metaphorically, actually. Somebody texted me, "Hey, I can't get into the Hyatt. Can you take care of me?" I'm like, no. There's another hotel. There's 2 more hotels.
Yeah.
So
you're the guy behind the guy. You can't make that. You can't make hotels happen.
Yeah, come on. All right. Nate Rossi had a great tweet that I wanted to get to last week, but I forgot. He said, since the October S&P 500 low, money market funds have taken in $832 billion. Equity ETFs only $18 billion. And the S&P is up 20% over that span. Still amazed at lack of equity ETF inflows. I remember when ETFs were the only reason markets were going up. Remember that? So can we put that argument to bed, or?
Yeah, isn't it just most of the movement now happens at the margins, and most people, the majority of money is just kind of sitting there doing nothing, and the hedge funds and if we're talking like the trillions and trillions of dollars in there, most of the time not moving from one thing to another.
You know, there's a chart showing the average holding period of individual stocks keeps going lower, which I understand. But if you look at the total pie, I wonder I don't know if this is measurable. If anybody has this data, shoot it to us. What would you guess the overall turnover of global assets are on an annual basis? I would guess 10%.
Right. I think
I don't know if that's way high or way low. Probably. Yeah. What would you guess?
Well, a few years ago, they had it on S&P, the SPY, and it was like the average holding period is 22 days or something. But people also use it as a hedging vehicle. Yeah. They use it to short. That's what I'm saying. I don't know how you would separate the crazy machine trading from regular investors. But that's
I'm also not saying that flows cannot drive performance for certain assets. They certainly can.
Yes.
But ETF flows do not drive the overall market. Come on now.
All right. Good piece from the Wall Street Journal called "Boomers Got Hooked on Stocks. Now They Can't Let Go." Nearly 2/3 of U.S. adults 65 or older own equity through individual stocks, mutual funds, or retirement accounts, according to Gallup. So remember the Gallup poll we've been talking about that shows how many people own stocks? They broke it down into different age groups. So they look at this: 18 to 29, 30 to 49, 50 to 64, and 65 and older. And the 65 and older crowd is the only one that has continued to go up every year since like 2001. Which
makes
is pretty
sense.
Good.
That's what we've been telling our clients, right? Living longer.
So that's what they said. As life expectancy increases, older Americans often need to fund retirement. Life expectancy. This is interesting. Life expectancy by birth rose about 5 years for men, 8 years for women between 1940 and 1960. That's crazy. That's a crazy.
Wait, say that one more time.
Life expectancy at birth. So if you're born between 1940 and 1960, jumped 5 years for men and nearly 8 years for women.
Over what time period?
If you were born between 1940 and 1960.
Oh, I understand. Huge. By the way, for people that are watching us on video, I'm looking down because I've got my phone. Because normally I've got a separate monitor. I don't right now.
So, do you think the reason that boomer equity exposures continue? The life expectancy thing is a big one. You're going to be living longer. But do you also think boomers have just been trained over the course of their lifetime that stocks are the only game in town if you want to earn higher returns?
Stocks are the safest long-term investment. Not the riskiest, the safest.
But if you've been in it for
However,
so long, you've noticed that every time there's a crash or bear market, stocks come back. So why wouldn't you increase your exposure to stock? I'm just thinking, is this an experience thing for the boomers that's why that they have more money in stocks now and it continues to
I
go
would
up?
I would say there's definitely an element of that. I would also say that I wonder, had interest rates over the last decade not averaged 0% and closer to 5,
Yeah,
this
that's a
might
piece
this
of it.
might be this might be different. So I think there's multiple facets in here.
So they also broke down equity ownership by generation. No one really talks about the silent generation anymore because they're obviously dying off, I guess. But boomers have, I don't know, eyeballing it. What is it? 60% of it. Gen
Wait
X
a
is
minute,
actually pretty.
but the silent gen still owns a ton of stocks. I mean,
Yeah.
25%, not 20, not quite 25, closer to 20. If you're in the silent generation, you were born before 1946, so at a minimum, you're like 70, close to 80.
So just imagine how many boomers are waiting for that inheritance to come through from the silent generation, right? The boomers are going to get even wealthier now because that inheritance is just going to trickle down. But look at how small the millennial piece is. I think that in the next 2 to 3 decades is going to explode higher. Gen X is
Hang on, that's not an opinion. That's just, I mean,
that's a fact, right? But Gen X is probably bigger than you would assume because look at it, it dropped to almost zero in 2008, and now it's above 25%. Not bad. I'm going to start having to charge for ad hoc research, but someone asked because we talked last week. I said I show the different unemployment ranges, right? I said when unemployment is high, returns are better. When unemployment is low, future returns are worse, right?
wait,
I,
before you dive into this, can I just say sorry to cut you off. Can I just say one thing just before we leave the population thing
mm-hmm.
or the demographic thing? People were saying that I had a terrible take on demographics. Quite a few people were saying this, or
You
population.
you got dunked on a little bit because
But
you
all
said
I
you didn't
was,
care.
yeah, how is that a take? I'm just saying I don't, it's not that it doesn't matter. Of course it matters. It matters a great deal. I'm just saying it's not something that I find super interesting. That's all.
You can't do a candlestick chart on population growth, so you're out on it.
Yeah, I'm just saying, yeah, no, it matters, obviously. Unless maybe I did give an opinion. If I did, I don't quite remember. But
I think
my
you
general take is
poo-pooed
that
it.
just,
You're not
oh,
there
did
yet to
I?
care.
I didn't mean to poo-poo it. It's just personally, I don't find it super interesting. That's all. Back to you.
All right. So someone asks, along with that unemployment stuff, we've looked before at stocks in higher or lower inflationary data, right? So when inflation is rising, stocks do worse. When inflation is falling, stocks do better. Someone said, Ben, why don't you show me unemployment rising or falling? So I
And you
did
gave
this.
in?
Yeah, it's a pretty simple one. I just looked at year to year. I just looked at annual returns. So 1948 to 1922, and I looked at is unemployment rate higher or lower over the course of a calendar year. I kept
Can
this
I
pretty
guess?
simple.
Can I guess at the results?
Sure.
I'm gonna guess there's nothing. There's no material impact one way or the other.
There was more than I thought, but they were both pretty good. So the unemployment rate is rising, you get 9.9% average returns. Unemployment rate is falling, you get 14% average returns. So it's
Wow.
better, but it's also
Well, I guess no. You know what? That makes sense because if unemployment is falling, you're probably coming out of a recession.
yeah, and you're in a
Yeah.
good strong economy. Do you
Okay.
know what the annual returns for the S&P are from 1948 to 1922? So you're taking away World War II, Great Depression, really
Total returns are closer to like 12%.
it's like 11.5% per year.
Yeah.
Pretty amazing. I mean, you're starting
Yeah.
there where like the 1950s were about to have
Do
an
you mind? Do you
unbelievable
mind?
bull market.
Now show Japan.
True. But I'm just saying, like, it's crazy. If you just take off the Great Depression crash, how much better stock returns get. Anyway, even with the Great Depression,
Caveats abound. Caveats abound. There was no S&P 500. There was no way to
yeah,
invest in a basket of stocks like that.
hey, you
But
couldn't reinvest. But even I did this for a speech I gave a couple weeks ago. Do you know what the average returns were from 1926 to 1959, inclusive of World War II, Great Depression, 1930s malaise, all this stuff? Yeah, average annual returns.
the 50s were a sick decade. So 7%.
Over 10% per year from 1926 to 1959, because that's when they did
Okay.
the crisp data. The first time they looked at those returns in 1960s.
What was it from 1926 to 1949? 0?
I don't know. I have to look. No, I bet it's probably closer to 7, like you said, but I have to look because you're right. The 50s were great, but it's just
I bet you 1926 to 1949 is closer to 0 than it is to 7.
almost every single long-term period of stocks in the U.S. stock market, if you look over like a 30-year period, is pretty fantastic. That's the takeaway.
Well, how about this? Not to go down this rabbit hole, has been beaten to death, but does the next 50 years look like the last 50 years? Like, are we gonna get 8% for the next 50 years, give or take?
Here's my take that I gave that I've given recently, that back then it was the barriers to entry to get into the stock market were so much higher. The spreads were wider. The fee, you had to
So
pay 1 to 3% to trade a stock.
net returns were lower. So is that where it's gonna shake out?
Yeah, net returns were lower. So I think now fees are so much lower. Maybe gross returns will be lower. Maybe it'll
Right.
be more like 6 to 8% versus 9 to 10%. But on a net
Reasonable.
basis, but on a
Yeah.
net basis, because you're paying so fewer fees and you have the ability to defer taxes, you didn't have that in the past. I think the number I looked at recently, I got a new piece out today. You can look. 85% of all money in 1965 was taxable. So like tax, because
Mm,
401ks run around, IRAs run around. So on a net basis, if we're talking net of everything, fees, taxes, all this stuff, investment expenses, all this stuff, I think now on a net basis, it'll probably end up being the same thing. I think maybe you had to have higher returns back in the day to compensate for those higher costs to get into the stock market. How's that?
all right. So we just zoomed out. Can we zoom back in?
Let's do it.
So market higher or lower at the end of the year? Have stocks gotten ahead of themselves?
So the S&P is up, what, 15% right now, year to date?
Yeah.
Higher or lower from here, higher or lower from the start of the year?
No, from here, from here. I'd be mildly surprised. Of course, nothing is too surprising, but I'd be mildly surprised if stocks are materially higher by the year end. Like, I think they're more likely to like lose 6% than gain
The
10.
number of 20% up years in the stock market is way higher than you think.
Yeah, I
That
know
would be
that's true.
that'd be my guess if I had to base it on probabilities.
So higher,
But
so higher from here.
if we're gonna I'm gonna zoom out again because this is what I do. We're probably 2/3 of the time we have a 10% correction, right? In a given year.
Yeah.
95% of the time we have a 5%. We already actually had a 7% correction this year. No one realizes that. But we had
When?
like a 7 like February maybe. I can't remember when but we've had like a 7% correction this year already.
Hmm.
I think people just kind of
I
moved
did not
on.
know that. I did not know that. Oh, there's a good tweet from Jared Dillian. I think there's a lot of truth here. Um, Jeff Gundlach, and this is definitely not a Jeff Gundlach specific thing. I think we all of us exhibit this. The quote is, "The stock market, frankly, is exhibiting signs of a mania," said Double Line CEO Jeffrey Gundlach on Wednesday, warning that the stock market valuations look, quote, pretty scary. And what he said is not really material, but I want to focus on what Jared
Jeff
says.
Gundlach has predicted 26 of the last 3 bear
Well,
markets.
he's a bond guy.
Fair?
They're bond guys are bearish. So Jared said, Gundlach is deep in the financial industry bubble. Stocks will be in a mania when I start hearing about them from people in Myrtle Beach. Nobody around here cares. It is not a mania. But I do think just the general idea that everybody has their own experience of the stock market through their Twitter feed. You know what I mean? If you are
True.
on Twitter, especially if you work in finance, your view is A, how are you positioned? And B, who are you following? It's very
True.
easy to get a skewed position of what the
And
actual
also
sentiment
hearing
is.
one or two anecdotes of an Uber driver mentioned to me they're trading stocks, or a friend. We went to a party a couple weeks ago and someone was asking, Ben, what do you do? We did that game. What do you do? What do you do? And I said I work in wealth management. I can't remember how I explained it. And the other person said, I work in healthcare. I have no idea about managing money. I know nothing about the stock market. Like, they wanted nothing to do with that conversation, which
That's
is fine
great.
with me. I'd rather not
That's
have it.
yeah.
But I think that's most people. Most people just live their life and don't think about this stuff very often.
Yeah.
But if you're in it all the time like we are, then you try to look for every little anecdote of, oh, this person did this and this magazine cover said this and this story said this, and there's just way too many data points now that you can screw yourself up with, I feel like.
All right, Ben, I want to do some stuff on inflation. I made a chart of CPI, all items, that's the blue line. Energy is the gray line. And what the lines that I'm talking about for people that are not watching is the 12-month standard deviation of CPI. So energy is crazy, right? It's all over the place, which is why core strips out energy. It also strips out food. And I'm looking at food, Ben. Does this look that volatile to you? Food looks as volatile as everything else.
Yeah, that's actually kind of surprising because people always say go to the grocery store if you want to see inflation. It's not, but so it must be just one-off items.
But I'm saying core strips out food because it's an energy because it says that they're volatile. But I'm looking, food doesn't look that volatile.
No, so you have all items here, food and energy, and food to me looks like all items.
Correct. Anyway, would be curious if anybody, any economist listening or has an opinion on that. All right, 12-month percentage chain for CPI. This is the BLS website gives a lot of good charts that you could play around with. So these are select items that are going down really fast. One is actually close to deflation. Disinflation is when it's going down at a faster pace. So it's still rising, but I'm sorry, at a slower pace than it had been previously. That's disinflation. Deflation is when it's outright the prices are down year over year. So not rising slower, down. So new vehicles as well as food at home are going down pretty quickly or rising less quickly than
I
they
feel like
had been.
automobiles are the ones that we've been waiting on forever.
So
And
that's happening.
I'm going to talk to my dealership tomorrow to talk about a potential new lease. So I'll get back to you next week on how that goes. I'm a little nervous.
You're not using a broker?
I'm not in New York, man. I don't have like a lawyer and a broker on call for every transaction that I do.
They don't have car brokers in the Midwest?
I'm my own. I negotiate all my deals for myself. When I negotiate cable, internet, cars, I do it all.
All right, well, I value service. Okay.
I'm like Lamar Jackson. I don't need an agent.
Medical care services is close to going down year over year for the first time. This data series goes back to 2003. Isn't that kind of interesting? I feel like that's the type of thing that never goes down.
That's true.
As I'm playing with all of these different, so it's energy, electricity, apparel, medical care commodities, shelter, there's a million things. The prices almost never go down year over year. So Ben, look at the chart up top. CPI, just for all items. This is from Fred going back to 1950.
Well, this is what we were talking about last week. You don't have a burst of inflation and then it just round trips and goes back to where you were. Inflation is always rising. That's the point. Prices never go down. Prices never go down. The last time there was deflation was after the GFC for a couple of months, and then in the 50s for a minute, and right after World War II, which, for obvious reasons. But prices don't go down. They just don't. No, because that would mean high on that. Because if prices went down a lot, wages would be falling, and people would be rioting if their wages were falling.
So Ben, to that point, I mentioned food at home is coming down pretty good. Look at food away from home. This went like from 5% to 6% over the course of 21 to 22, peaked out at about 8.5%, and it's not coming down at all.
The restaurants took advantage of it. This is the kids' meal thing I was talking about.
This is kind of wild. Somebody sent me, Jonathan sent me a picture of a hotel bar menu. He said, "Guess where I am right now?" I said, "I know exactly where you are."
$86 tequila there.
$86
okay,
tequila.
So here's what I don't get. So look at this. So I looked at the inflation rates in the UK, Germany, Italy, France, and the US. They're all way higher than us now, right? The UK is still almost 9%. Italy's over 8%. Germany's over 6%. France is at 6%. We're having like the best growth coming out of the pandemic of the developed nations, and our inflation is the lowest. How is that possible?
I don't have an answer. I don't
know.
I
feel like you never really know what the Fed is thinking, but I think one of the reasons they went so hard last year and were like talking the stock market down and really like managing with an iron fist, ruling with an iron fist, is because they thought the only way that they could really legitimately bring inflation down is through job loss and a recession. I feel like they looked at history and thought, there's no other way to do this. Let's take our medicine now and move on.
Which was fair.
But I think now, in the back of their head, I think they're thinking, wait a minute, we could be heroes. Like, what if, and I think this is like through no fault of their own, that the U.S. economy has remained so resilient that the Fed is thinking like, wait a minute, we did all this stuff and the economy is still chugging along. What if we could get out of inflation and not have a recession? Now, why don't we actually try to thread this needle and go? I think that's why they paused. I think they're looking at it like, wait, we actually could do this. Like, we could be heroes and try this. And I think the Fed may be thinking that now and like going for that angle. Thoughts?
A lot of the narrative last year was the Fed wants you to lose your job. Jerome Powell wants you to lose your job. Were those headlines all over the place?
Yes, that's what he was saying. He literally said that.
So now they're saying that, well, Yellen is saying that they think avoiding recession is possible. I think he said that too in the last presser, but he also said that the full effects of our monetary tightening have yet to be felt. So we're going to take a pause and reassess.
If I'm basing this on one segment of the economy, why I think like, okay, I think the soft landing now is like it's way higher probability than I thought, is housing. The fact that the housing market remains so strong. You saw the housing start data this morning when it came out.
Yeah.
We're recording this Tuesday morning. The fact that the housing market has had these exorbitant interest rate increases and it's still just chugging along okay, it didn't get just totally decimated, is shocking to me. I
Travel
never
as
would have
well.
believed that. Travel,
Travel as
yes.
well. I thought that there was going to be a one-time spree of people saying, "Oh my god, I got to go on vacation." It's not slowing down. Not even a little. Like,
Yeah. I mean, you go out in the summer now too. People, it's like it's an excuse to spend money.
Bob Elliott had a really good chart. He said, even with 500 basis points of tightening, money just isn't all that tight. In past cycles, rates peaked more than 5% above core PCE inflation, which is personal consumption expenditure, and that's the Fed's preferred target. Today, the Fed's actions have brought rates just to match it, which is an interesting point. Like, just because rates are 5% doesn't mean that money is necessarily tight.
True. Yeah, there's a difference between the level of rates and the level of credit, right? That's two different things. So Dario Perkins posted this, and it's growth in global goods consumption since 2019 Q4, which is the start of the pandemic. And it's the US and then the OECD excluding the US. And I got to be honest, I know the OECD is like this collection of developed economies across the world. Gun to my head, could I like explain what the OECD is? No. But you see it all the time. Do you know what the OECD is? Like if you had to explain it?
Not only do I not know what it is, I don't even know that I can give you what it stands for. Is it the Organization of Economies Cooperating Developmentally? That's not even close.
Organization for Economic Cooperation and Development.
Oh shit, I was
37 or
close.
38 democracies with market-based economies, blah, blah, blah. You see it all the time, though. And I feel like people just assume everyone knows what that means, but I feel like no
Oh
one
yeah,
knows
let me
what
ask
that
you
means.
this. I'll see your OECD and throw you a G7.
Well, G7, that's a little easier, no?
Tell me. Yeah, let's
I
hear it.
don't,
The
I
mic is
could, no,
yours.
I just, it's just way easier because there's like 37 OECD countries. Okay.
No. I'm just saying. I think I can potentially name the G7. I'm not gonna try here, but I think I could do it.
Okay.
But what do they do? Because isn't that all about, or is that
Yeah,
just a group of nations?
there's a lot of coalitions, it seems like. All right, so he looked at growth in global goods consumption since the start of the pandemic. And look at how much the US has done in terms of growth. Like, it's, I don't know, 90% of the growth for all these OECD countries. Now, look at this next one. US share of OECD goods consumption as a percentage. And this is since 2010. It's gone from 1/3 to 40%, basically. And look at that jump in 2020, going from like 35% of goods
How do you
consumption.
explain? How do we explain the growth? It's just up and to the right.
We love to spend money.
No, I know, but there's got to be some sort of reasonable explanation other than that, no? Or is it just that simple?
I think the U.S. just becoming wealthier. You'd think that other countries would catch up. I think if America is like, we have the best basketball players in the world, that's starting to waver
Not
a
true.
little bit too. It's starting to waver a little. We're better than
For the top 5 are international.
if the aliens came down and said like, pick a skill for your country. The U.S.'s biggest skill would be we know how to spend money.
It's really funny that this was a segment because in my notes right here, here's what I did when I was in my car. I wrote American spending Sunday morning. So I thought about this on Sunday as I went to the bagel store to get bagels and tuna fish and, you know, what we do for Father's Day brunch. So I spent $80 there. Then I went
Bagels
to
and tuna fish? That's your Father's Day brunch?
Well, it wasn't just tuna fish, but I'm not even hearing this. We're not having this conversation. So I spent $80
This is a
there.
delicacy I'll never understand. Like what lox? Is that the other thing?
I don't do lox, but that's a very Long Island thing as well. Do you do?
Sorry,
do you
see,
do, what about egg
we had
salad?
donuts. We had donuts.
What
Egg
about
salad,
egg salad?
And that egg salad guy. That's just personal preference. I'm not.
All right, but fine. Let me ask you this: if you're doing a brunch that you're hosting, what, you bring in 40 donuts? What do you serve people?
Eggs.
You're making scrambled.
egg
You're making scrambled eggs for 10 people.
maybe like an egg casserole dish with some sort of protein on the side, sausage, bacon, that sort of thing.
I like that too. I mean, nothing wrong with that. Anyway, then I went from the bagel store to Starbucks, where I did not spend $7 on a Trenta with a few shots because I used my points, but I would have. But you know, $7 at Starbucks. Then I went to CVS for whatever. And I was just thinking, like, this is just what it is. We just
Yeah.
spend money. Spend,
I also
spend,
think
spend.
can you put some of this on like credit cards and apps and Apple Pay and stuff where it's so much easier, in Amazon where it's just clicking buttons. It doesn't feel like spending money. I thought too, because the money I spent this weekend, I thought if I would have had to go to the bank every time just to get the cash out and then spend this money, it would have hurt. It would have been way more painful than just sliding my credit card or putting it in whatever. It's you
That's
don't
a huge
you don't think about
that's a huge element. Nobody gets into debt with cash, right? It's so much
it.
so much easier to swipe because it's like out of sight, out of mind until you see your credit card. Be like, holy, wait, how did I spend that much money? But
Yes.
that's a big component, as
Yes.
well as the rewards. By the way, did you see there was an article about it was like cards are ruining the travel lounge or something?
Yes, that we had our discussion last week about the travel lounge, and a lot of people wrote in to say, "Hey, listen, Ben, you're right about the travel lounge being overrated because so many people go into it now. There'll be like lines out the door to get in there because every credit card now allows you access."
Yeah, but I feel like the one that I got, I don't know if I said this last week, but I got the American Express Reserve, which gets you access to like some of the nicer lounges. But I don't even care. I'm not a snob. I'll get into any lounge. I just want to get into a lounge.
We looked at mine afterwards. I had the American Express Platinum, and Duncan said I get into like the Centurion
Oh,
something.
same. So we have access to the same spots.
Okay, maybe I'll see you there sometime.
So we're ruining. Sorry.
It's because I have like 12 different credit cards. All right, go to Eddie Elfenbein. Survey of the week. The United States is effectively bankrupt. True or false? 68% said false. 32% said true. I don't think people understand what the word bankrupt means in this context.
Well, that's understandable. Do you think that there's not? Do you think there's a huge difference in the portfolios from group A to group B?
Oh,
Huge.
yes.
Huge.
That's true. You don't even need to ask what's in your portfolio. You kind of know.
I don't think there's many bogleheads that think the stock market is the economy is bankrupt.
No. The people who say the
Probably
United
a lot
States
of
is bankrupt,
hard asset people.
yes, they have physical stuff in a
Yeah.
safe.
Yeah.
Here's our good news of the week. We talked about some good news last week. People liked that one. This is from Axios. The estimated Gini global income inequality coefficient is at its lowest level in 150 years. So I think this I don't know how the Gini, we're talking about other things, we don't know how they work. They just are. Let's see. On a scale, inequality from 69 in 2000 to 60 in 2018 is almost certainly lower today. That means the world is more equal now than at any point since about 1875. The countries with the richest citizens are generally the world's most powerful. That power is now more broadly distributed than any point in over a century. They're basically saying countries like India and China becoming more wealthy are
thank you, blockchain.
evenly distributing things. And this, I don't know, this surprises me. The funny thing is that it's probably becoming more unequal in the United States, but on a global basis, becoming more equal. Does that make sense?
Yeah.
Like if you look at it in the United States, it's probably not falling this much, but globally, that makes sense. But anyway, good news.
The layoffs section of our doc has fantastically been pretty quiet. Sonos, actually. Okay. Do you have a Sonos?
I do. I just had a good experience with them. I have one of those little Sonos Roams. It's just a little one. I have a big Sonos speaker, then I have the little one that you can kind of move anywhere.
Like
And
take it to the beach type thing?
yeah, I hadn't used it in a while, and I got no light. I was charging it, nothing. And I called them, and they said, hey, we're going to send something to it, and they did it, and it worked. I couldn't believe it.
How about that?
They fixed it for me. I thought I was going to have to buy a new one.
Anyway, Sonos is laying off 7% of their staff. Sonos went public, no? I feel like that's a stock that I never ever. Yeah, it did. I'm assuming it crashed. Let's see. The stock has been not not good.
This was definitely a pandemic play then, because it went bonkers in the pandemic.
Yeah, that's right. Yeah.
Bottom at $7, and it topped out at 40 something.
It's almost where it was when it IPO'd, but yeah, hell of a ride. This is interesting. Did you see this? Instant Pots. I think they're filing bankruptcy. I don't know if they're going away or if they're restructuring. But net sales fell by 22%, the 7th consecutive quarter of decline. I feel like with the benefit of hindsight,
that was a fad, right?
This is the type of thing that is easy to see coming. I don't know if this was a fad. It was just, it was the work. It was the pandemic type thing. Everybody was
I remember
buying
people talking
the
about
Instant
them a lot
Pots.
when it happened. But what did you? Is it like I'd never used one before. What is it? Kind of
It's
like a crock pot?
I think they make slow cookers. Yeah. You know what?
So you'd make brisket in it. Did you make brisket in an Instant Pot?
Tons of brisket. I'm surprised. That's the only way to make it, right? You can't make brisket anywhere else. Uh, just kidding. But I haven't used mine in like a year. I'm not quite sure why. I love that thing.
We never got my middle age thing is that I'm definitely Duncan says you can make a baked potatoes in 5 minutes. My big
I'm
thing that
not
we still
middle aged,
use a
by the
lot.
way. I had an epiphany. Middle age is 50 is once you're 50. I'm sorry. It's not me being in denial. I'm just not middle aged. It's 50.
You're definitely every week in the comments on YouTube, someone says Michael slowly realizing he's middle aged is the greatest thing ever because it's been happening like 6 months in a row.
Well,
But my middle age thing is
yeah, go ahead.
the air fryer. I've heard people say that like people swear by their air fryers. I cooked some asparagus in it last week and usually put it in the oven maybe or on the grill and it takes forever. Like 10 minutes in an air fryer and you get crispy, nice
Yeah,
crisp.
air fryer is great. Air fryer is great. So remember I said I'm turning into my dad. So my dad always. So I have a brother Matthew. My dad always like calls me Matthew or mixes up, which is understandable. But I cannot keep my kid's name straight. I always it doesn't make sense. There's a 50-50 chance. I always get it wrong. I don't
See, my mom was
understand.
like that too. I'm pretty good. So you had the epiphany of turning into your dad. I had one too. This is gonna sound like a humble brag. It's not because one of my dad's favorite things to do is he loves to just take his dog for a walk. He goes for like 2 or 3 walks a day.
It's a great activity.
But when I was growing up, my dad would bring like a plastic bag from the grocery store and pick up trash on the way. And that I'm like, that's such a dad thing to
Trash.
do that. Like
Wow,
trash on
what
the
a
side of
good
the road. Like,
what a good Samaritan.
yeah, my dad's a good guy. But so and I'd be like, why are you doing that? It's so gross. It's such an old man thing. And in a young age, I would think like, why would you ever do that? And now with my kids, I'm turning in my father. I pick up trash all the time.
You have
Like
some
I want to
pride in
get
your, is that you have some pride in your neighborhood?
well, my kids were learning about like littering and like
Mm.
being kind to the environment. And so I started picking it up and my kids will now be like, Dad, there's a piece of trash. And there's some stuff I obviously won't touch, but I want to get one of those walking sticks with like the
Like
sharp
the
thing on the end that you can stab I want to get one of those because once you start seeing it, it makes me angry that people just litter all the time. I hate it.
Yeah,
I'm a big
littering is gross. I'm not a fan of. I mean, I've been in situations where people throw things out the window. I think it's a dirtbag move. Now,
you never got into
I
Mad
will
Men.
I will flick gum, which is probably not nice, but I won't throw I won't throw a donut out the window.
Well, food is okay because that's
Are you being
an animal will
serious?
get it. Throwing
Oh.
food, right? Food's okay. Food's not littering.
So
It decomposes.
my dad is notorious for saying things incorrectly. For example, you know how last week when I was like, "Holy shit, I'm turning to my dad," I called Dennis Green Dennis Allen, right? That's what I did. My dad yesterday or on Father's Day, we were talking about like my dog's tail was wagging. He's like, "Oh, that reminds me of the scene in that movie with Jack Black. What's it called? Along Came Mary." And I'm like, first of all, you're thinking about Shallow Hal, and it's Along Came Polly, not and then something about Mary, but he called it Along Came Mary, and I'm not far from that.
I can see that. Okay. Good one from our colleague Nick Majuli. Why are houses so expensive? This was a good stat. Over the past decade, U.S. housing prices have increased nearly 4.7% above the rate of inflation, while median household income has only grown by 1.5% per year over inflation over the same period.
That's a tough stat.
That's a massive, massive number if you're
Yeah.
not in the housing market. If you're in the housing market, you're golden. If you're out of the housing market, you're screwed, unfortunately.
Look at this chart. Wild, huh?
It really is. The funny
What are
thing
we
is
looking
that
at? What are we looking at?
so real U.S. housing index since 1890. This is from Robert Schiller. It's adjusted for inflation. From the end of World War II until 2000, U.S. housing prices appreciated by basically 30 basis points a year after inflation. In the 7 years that followed, they grew 6.3% above inflation, which is 20 times faster. So we've had these huge, just a takeoff in housing prices in the 2000s and then now. And yeah, I remember Robert Schiller first wrote his book in like 2000 talking about, or the early 2000s, talking about how housing should basically track inflation over the long term. And ever since then, it hasn't at all.
But wait, that's like a national index, obviously.
Yes. I don't know. I have a feeling they're going to be studying this period of the housing market for a long, long time in the future. And because I don't know how it's going to get better.
So next piece basically said three things. It's a lack of supply. It is a lack of new homes, which I guess are the same thing. This is demographics. This is like the big one, right?
Yeah.
There are 70 million millennials that
underbuilt.
are moving out of the cities.
It's kind of weird to think about that the crash in housing prices in 2008 and that lasted to 2012 basically set up the bull market that happened in the pandemic. If that crash didn't happen and people didn't stop building homes, things would probably be a lot more healthy right now than they are. So this is a good one from Twitter. This is price indices for housing relative to construction costs, and it's showing the UK is like 3.25 times the cost. The US is still relatively low. It's at like 1.5 times.
So there's like the markup.
France is high. Yeah. So this is essentially like, I don't know, how much does land cost, right? Because it's replacement cost versus prices, and things are way
Well,
way worse
it says
elsewhere.
relative, not to nitpick. It says relative to construction costs. You assume that includes the price of the land, probably.
No, I think means how much to build a house. So that's so the land. This is the reason it's so much higher there is because land is so much more expensive. Because if it costs $500,000 to build a house, but it costs $2 million to buy it in London, the difference is the price of the land, right? So
I don't know.
so this is stripping out land. So it's basically just saying it costs to buy a house. It costs way more because it's so hard to get where you could actually build a house, but if you didn't have the land, you're screwed, right?
Look at the UK. That's wild.
It's really, really, yeah, exactly. They're in a way worse position than we are. Maybe that's why their inflation is still 9%. I don't know. Good one from Redfin here. 1/3 of U.S. home purchases made in cash in April, up from 30% a year ago, comparable to 33% in February, which was the highest in 9 years. Typical down payment, 52,500, which is pretty high, down 18% from a year ago. But look at this. Look at this typical down payment. If you go back to 2011, it was, I don't know, $30,000. It got as high as $65,000 in 2022. Now it's falling, and I think that's because the median down payment is as a percentage is going down. So I guess it used to be 16.5% a year ago. Now it's 13%. So I think housing prices rising and interest rates being so much higher, people are putting less down, which honestly makes sense to me,
Totally.
right? I'd be
You could
putting
afford.
it down
I
as
mean, you
little
could.
as I could. Yeah,
Yeah, you could afford what you could afford.
right. So yeah, people are trying to make it work by putting less down, which I think actually probably makes sense. No, we've talked about this a lot, but more than 9 in 10 mortgage holders have a rate below 6%. This is also from Redfin. Look at that, how that changes over time. 82% have below 5%. So yeah, it's not great. They gave this hypothetical about a buyer who bought in 2018 when home prices were around $280,000 median wise and 4.5% mortgages, which, not 3%, but not bad. So they would be paying $1,000 less today. So you bought in 2018, you're paying $1,000 less a month. I mean, that monthly payment spread over the
It's a
course
lot.
of how many ever years? Here's my question. Why are mortgage rates so much higher than 10-year treasuries right now? I know we've talked a little about the reasons. Why aren't spreads coming in at all? Is this just a mortgage bond thing? Because look at this. I put this on a line chart. The average historically, going back to 1971, Sean did this for us, 1.7%. Currently, it's like 3%. Over the treasury. So, because 10-year treasuries are not that high. They're 3.7, 3.8%.
Well,
Mortgage rates are 7. Why is it so much higher?
What drives the spread of mortgage rates? Is it
I
demand?
th- I think it has to do with mortgage bonds and the fact that you're not going to get
Oh,
prepaid.
right. We've spoken about this. Yeah, yeah.
But it's
Joe and Tracy did a deep dive on this.
I don't know. It's just hard to fathom the fact that the 10-year treasury is still relatively low relative to history. 3.7% is pretty low for a 10-year treasury yield. Not lower than
Yeah.
it was in the pandemic, but it's still pretty low, and mortgage rates are still this high. I don't know. I'd be pretty angry if I was getting a new mortgage right now.
Did you see that there's a chart from the Wall Street Journal about renters? We don't speak about renters that much, but the new lease asking rents percentage change from a year earlier, according to Zillow, Redfin, and a bunch of others. According to Redfin, the prices are down year over year. So this is disinflation too, where prices are still rising, but the speed at which they're rising is crashing. Are these going to go negative?
This is good news. I think it probably will. I think
Looks like
rents
it,
are,
right?
yeah. This is good news for people who decided to sit out the home buying process and just want to rent, right?
Yeah, yeah.
That makes sense. Okay. Every year, Vanguard puts out this How America Saves report because they have, like, I don't know, trillions of dollars in 401k, IRA plans. This is so across the Vanguard universe of participants, 83% of eligible employees were enrolled in their employer's voluntary savings programs in 2022, which is pretty good. 8 out of 10 people who had a 401k enrolled in it. That's up 8% since 2013. But if you had automatic enrollment, 93% participated versus 70% with a volunteer enrollment. So that automatic stuff is good. What do you think the average savings rate is for someone in a Vanguard 401k?
The average savings rate in terms of dollars or percentage
of their target is 12 to 15% to meet retirement goals, which I think is a pretty good target. I think I'd be aligned with that. 12 to 15%.
So let's say 7 or 8.
Yeah, it's like 7.4%. But they said 20% of participants would need to boost their savings 1 to 3% to hit their target.
It's pretty good.
Not bad. But I like that 12 to 15% as a goal.
Anything else interesting? Any other good takeaways, tidbits, if you will?
Not really. I mean, there's one that show the average deferral rate by income, and even over $150,000, the average is still only 8%, which I've assumed would have been higher for 401. This doesn't include a match. So with a match, it's obviously a little higher if you get one.
Ben, we've spoken about this a million times, and it's a topic that will just probably come up every so often because I think it's a trend that's up and to the right, unfortunately. Steven Ratner had a tweet thread, if the economy is so good, why are so many Americans grumpy about it? So he shows different opinions, surveys, if you will. Country on the right track, everybody says no, or not everybody. 75% of people say it's going in the wrong direction. Optimism about the economy, not good. Consumer sentiment, terrible. Presidential approval, awful. Americans feel a lot better about their own lives than they do about their country. 73% rate their personal situation as good or excellent, but just 18 people say the same about the U.S. as a whole. And I don't think this is complicated. It's just social media for the most part, right? You have more access to what other people are doing, and we don't like other people generally the royal way, right? We like people that we know, and
so there was a
sad state of affairs.
There was a story in the New York Times today called "Your Brain Has Tricked You into Thinking Everything is Worse," and Derek Thompson summed this up on Twitter. He said, basically, your memory is biased towards positive information, which is nostalgia. So you think positively about the past, but our present focus attention is being biased towards negative information, meaning our general perception is that everything is always getting worse. We look at the past more fondly and we think about the positives of the past.
Yes.
But in the present, we think about the negatives, and that means that's why we constantly think things are getting worse, even though they are definitely getting better for society as a whole. Which I thought that's a good piece.
Good take. Somebody sent us a check from Denver, Colorado. Was this Sean?
Yes.
Or is this... Okay, this is from Sean.
I really would like to know what a strawberry daisy drink is. I mean, we have no room to talk since we drink Miami Vices, but there's a strawberry daisy on here, which I've never heard of.
Sure, it's delicious. Although now that I'm examining this menu, who's drinking a strawberry daisy and getting a miso soup? This looks like a sushi. Yeah, crunchy red. Interesting choice. I'm sorry, you don't drink daiquiris with sushi.
Okay.
But anyway,
I don't eat sushi either. I'm a wimp when it comes to you like the finer things in life, I guess.
Me? I don't eat sushi. I mean, I don't eat seafood. I'll eat like a California roll.
Oh, that's true. You and I went to a seafood restaurant once, and we both said, we're out, sorry.
Yeah, don't eat seafood. So, but there was an employee wellness fee of 3%, which is... that's over the line. I'm sorry.
It seems
employee
excessive.
Wellness, you pay your employee. We'll tip.
So, on the machines that ask for the tip now, you can write a little message there. And I saw one of them said, industry standard. They're pushing you towards picking a certain amount. And I think it was 20-25%. It was a higher end.
That's high. Listen, I grew up in the service industry, okay? Valet parker, caddy, only for a day. But I spent years parking cars, cabana boy, waiter. So I know from this. I take care of the people, but there's a time and a place. And an employee wellness fee is not one of them. Know what I tip my valet parkers?
What?
Oh, I'm debating about this. It might be too much. I might have to throttle it back. $10 a day. Or $10 a park.
Okay. It's so expensive to park at a hotel, though, too. If you park at a hotel, it's I don't know, $70 or $80 a night or something. It's ridiculous.
That's a scam.
Yes, that is a scam. All right, someone sent me this. Credit card in front, HELOC in back. Home equity backed credit card. lower rates, 8 to 15%. I've never heard of the company here before, but I talked about how people are going to be using their equity for different financial means.
Wait, what
It's
is
kind of make
this?
it's a
So
home equity backed credit card, meaning your home equity is I don't know how that works. How you
okay,
it's a credit card to unlock home equity. I honestly don't know how it works, but I thought
I'm
that
intrigued. I'm
because
intrigued.
I've
The low
I've
APRs are good, maybe because there's obviously a lot of collateral there. Still can't believe Amex charges 28% APR. That's wild.
unsecured debt, I guess, but yes, that's pretty high. Someone actually asked me the other day, do you think most people pay off their credit card? And the assumption was most people do not. My
No,
thinking
well, you
is
say most over 50%. I would say most people do.
I think so too. I think it's a small percentage, like I don't know, a third maybe that don't pay it off, and they're the ones who get caught eating the late fees and they don't make them pay. I think it's
I
it's
think
a
it's less
smaller
than that.
subset than you think.
By the way, this data has to be available. Has to be. But I would guess 1 in 8 don't pay their.
That's
Maybe I'm
probably
way
fair.
off. I don't know. 15% ish don't pay it off. All right. Got an email. Oh, hey guys, I'm a journalist and an author who cold reaches out to folks regularly. I sometimes try to do the scheduling thing. We're talking about the email thing that I spoke about this week. I sometimes try to do the scheduling 2 or 3 weeks out, not for my own sake or my own busy schedule, but because I assume that you are busy. Which is very,
That's fair.
very polite. That's
Thoughtful.
not what I'm. That's not what I'm referring to. I totally
Right.
respect that. If that's your thing, I'm saying like when somebody connects you and they do like, oh yeah, I could talk to you in 3 weeks because I'm so busy. I don't like that. I
Right.
just don't like it. Sorry, don't like it. Uh, I don't think anybody's too busy for a quick call. All right, Ben, I had a thought. I was in the deli the other day getting an egg wrap for breakfast, and Robin said, get some gum." So I looked under the counter, and they had gum, and some of the gums that hit my face, I was like, "Oh my god, it's still a thing." Juicy fruit, double mint, and Big Red. Remember those?
Yeah,
Obviously.
you don't see a whole lot of new gums anymore, do you?
Well, I feel like Orbit was like brand new back in the day, probably 20 years ago that hit the scene. But and I'm not judging at all. But who do you think buys Big Red? Who's the buyer of Big Red gum?
That's a good question. I never really
So
did
for
it for
the
me.
so for people that are, I guess, under 35 who don't know about Big Red, it's like a pack of gum, obviously, and there's like 5 sticks of like kind of
It's like you're snorting cinnamon.
cinnamon. Yeah,
Yeah.
I'm not a big cinnamon guy, so. But anyway, so I went on the Wikipedia to figure out like, hey, what's going on here? All right, so those gums, all of those gum, can you pluralize gums? All of those gum were owned and made by Wrigley, which was bought by Mars in 2008 for $23 billion, which blew my mind. But here's what really blew my face: Juicy Fruit. You know when that came out? Are you looking at the doc?
I see it now. I
Okay,
at
Juicy Fruit,
1893.
1893. There
Jeez.
was gum in the 1890s. Double Mint, 1914. Big Red. Wow, they took a huge break. Big Red is
It's kind of funny
1975.
that we discovered gum before penicillin.
Hubba Bubba, what's that? You know what Hubba Bubba is?
Yeah, that's like the
Oh,
pink
Orbit. They
pink
make Orbit.
stuff.
2001. So anyway, uh, more fun facts on Wrigley, on the gum. Goose Island. That's where they're located.
Where's that?
Chicago.
Chicago? Oh,
Haven't you
yeah.
been there?
I've had Goose Island beer before.
Okay,
You know
and
my
they own the big building, the Wrigley
you know
building, right
you
on
know
the
my
shore, right
go-to
on
gum
the
is?
lake. Did I call it the lake
Oh,
or the river? My go-to gum. Go ahead, you first.
I like the Mentos gum.
Mentos gum. Mentos gum is
It
good
looks
gum.
like a little Mento. Yeah, I like that one. It's fresh.
Uh, I like not the Orbit little squares, not like the little rectangle ones. I do the crunchy white, the one with the crunchy white outside.
Well, we must be in a bull market because we're talking about gum here. So
Yes, I'm
this
thinking
is
like literally nobody cares. I apologize. We got too far afield out
all
here.
right.
All
I've
right,
got
where
some
are we
good.
going
I've,
next?
I've got some good recommendations. All right, I've got a
All
new
right.
show, Apple TV, Platonic with Rose Byrne and Seth Rogen. I loved them together in Neighbors. I loved that movie. I think part of it was because we had just had our daughter when that movie came out, so we had a toddler.
I feel like
But
Apple sneakily is putting out some decent content.
so there, it's just weird because I don't have any comedies in my life anymore. There's not many. I mean, obviously Succession was funny, but that was more witty than funny as a comedy. This is an actual comedy. I think Rose Byrne is highly underrated. I think she's funnier in this show than Seth Rogen is.
She's great.
And it's a great midlife show because they have kids and dealing with it's kind of like a midlife crisis kind of show. It's two friends who they were best friends in college. Her and Seth Rogen were best friends, and they kind of split, went their separate ways, and then now they're kind of finding each other again in their 40s and becoming friends again. It's not like it would have been a funny movie in the 2010s if it was made, but each part of the show has funny parts to it. And the funniest part, it takes place in LA, and they ride those little scooters around that you and I always ride when we go to cities, And a running bit for some reason is Seth Rogen. Every time he sees one, he like drop kicks it or throws it. He hates the scooters and he pushes them over. And I feel like there has to be a backstory there, but it just makes me laugh every time.
Speaking of LA, I'm going next week. Will I get access to my lounge?
We'll have to see. You'll have to give us a review. All right. One of our newest advisors at Rithold slacked us a couple weeks ago, Eric, and said, "You guys have got to revisit The Graduate. It holds up really well. I haven't seen it in like 15 years. It's on Amazon Prime. I watched it. He's totally right. This movie could have been released now, and it would have worked." And I've got a few things to say. I read the Mike Nichols book about it, and it's so funny about Mike Nichols, who's the guy who directed it. And they said, like, when they picked Dustin Hoffman as the lead, everyone was kind of like, he's okay. Like, no one thought, like, this guy's going to be amazing. They thought, like,
was he like 25? How old was he? He looked like a baby.
Yeah, he was pretty young, but it holds up so well. The movie could be released now, and it would have been good. I'm usually not a fan of, like, really weird movies like that, because it does have a weird tone to it, but I love it. Here's two things that stood out to me. The 1960s style that stuff could work today. The stuff they wore, like the short shorts at the pool and the loungewear, you could wear that. Like, the style in the movie was great. And I just love how every house had a bar in it. Like, that was like a thing. Like, you just had a bar, and you assumed if you go to someone else's house, you go get a drink because there's a bar right there. Anyway, great one.
I watched that. Wait, hang on. On The Graduate, I watched that for the first time like 2 years ago. And you're right. Phenomenal movie.
Yeah, it's so good. I have a recommendation for you. From the man who brought you Tropical Bros and Bird Dogs. Now you need a pair of sunglasses that you can wear in your jet ski that are not expensive and won't fall off. Gooder sunglasses, Goodr. Okay.
Goo.
I put a link in the doc here for you. They're like $25.
You know what?
They're rubber. I wear them like in the pool, on the boat. When I go jogging, they don't fall off, and if they do fall off, they're $25, and I don't care. So I have like 4 pair, and if they break, I throw it away and get a new one. Those are your summer beach glasses.
Okay, you know what? I will buy a pair because I always lose my sunglasses. The ones that I currently have, I feel like it's my longest streak. It's like 2 years, but I'm afraid to buy expensive sunglasses. I lose them. I did buy goggles for my jet ski, but but $20 on Amazon. I'll buy these two. Thank you.
That's all I got.
Speaking of bird dogs, yesterday at the beach, my wife's son was like, so her colleague listens to us, and the wife texted the friend that like my husband's buying a pair of shorts that your friend's husband was talking about.
My father-in-law bought some.
Damn right, he's buying bird dogs.
Nice. We influenced someone.
Okay, 2 things from me. I rewatched The Purge, which I haven't seen since it first came out. What year was that? 2013.
It's a really good idea. Even though I'm not a huge fan of those kind of movies, it's a really good idea.
2013. And I'm going to say it holds up because it's only 10 years old. It's an awesome movie. Just a really kick-ass movie.
Yeah.
And I watched last night a movie on Shudder. Oh, wait. Before I get to that, do you know about this one, Ben?
About my father?
Holding my phone. I'm holding my phone from my screen.
Yes.
About my father. So this keeps popping up. It's a new one with De Niro and Sebastian. It's got to be horrendous.
It didn't look great.
It's got to be horrendous. What did it get? About my father.
It's loosely based on his life.
Whose?
Sebastian Maniscalco.
They got I stand corrected. Okay, this is a winner. The critics gave it a 36. The audience gave it an 81.
I'm gonna try it.
That's a winner.
I don't have high hopes, but I'll give it a try.
Yeah, but when there's a giant spread favoring the audience for comedies, the audience is almost always right. I will definitely watch this. Okay, so I watched a movie called Influencer. You probably never heard of it.
No.
I watched it on Shudder via Amazon, and it's about an influencer who goes to Thailand and starts to get stalked by a stalker, and it's quite creepy. it's in the horror genre, I guess, but it's not scary. It's not like slasher, you know? It's just very creepy, very well done. And if you are into those movies as you know I am, I would recommend this. And
You
as
just
I bet I see the wheels turning and you're about to say something. Before you say something, let me just say my piece.
okay.
I think you and others think that I'm the only person that watches movies like this. Clearly, that's not the case because
No,
they
there's
get
a
made,
huge
right? I'm not
audience for it.
yeah,
Yes.
it's. I mean, there's got to be tens of thousands of us that enjoyed these movies.
I just
Maybe
oh,
even maybe even hundreds.
the horror. It's like horror and sports or horror and superheroes. That's the only thing carrying the movie industry the last 10 years. But it just occurred to me that like you don't go to the movies wanting to like sit back and relax and just kind of like turn your brain off. You go to the movies to be like freaked out or thrilled or scared. Like it's like a tense experience. You love having a tense experience in the movies. That's not me.
Yeah, and guess what? I don't even know if I enjoy it, but I love it.
Okay.
And I found this. So Rotten Tomatoes did like the top 100 horror movies of the year. So that's how I found Influencer. Quite good. In fact,
See that's
yeah,
that's
I'll
the
say
problem.
that.
If there's
I
100
recommend it.
horror movies in a year, that there's too
recommend
many
it.
of them. But
Nope, disagree.
there's obviously a market for them. All right.
All right. Anything else, Ben, for the audience?
I got nothing.
All right. You know what? Before we go, it's almost July. How does this happen every year?
And
I'm
you
not
say-
saying the year,
You say
but
you're not in midlife crisis yet.
summer is almost over. I know summer has that yet to begin, but it's almost July. It's beginning of the end.
You're an old man. Animalspiritspod@gmail.com. See you next time.